Welcome to the Economic Countdown. Please remember to like, comment, subscribe, and share. You ever have that fear of missing out? Right now, institutions everywhere are feeling it. With Bitcoin getting grabbed up as quickly as it's being produced, soon there won't be enough Bitcoin to go around. This is when the true price explosion will come about. Then what happens? The Bitcoin buying frenzy, and how that will lead us into the next phase of institutional buying that will involve Ethereum. In cryptocurrency, fear of missing out, or FOMO, is something we usually reserve as a word we use to classify poor retail investors who simply don't know when the best time to get in is. They see prices pumping, and instead of being patient and waiting for a good entry point, they just pile in all at once. In this case, it's not a good thing. But what if we weren't talking about FOMOing in for a price pump, but a hysteria to buy up the entire supply of the asset? That's what we're potentially looking at with Bitcoin right now. Remember, in 2019, one Bitcoin was at 10,000, and last night traded at a record-breaking 34,000. Every day, the entirely new produced supply of Bitcoin is gone before it even hits the general public. There is institutional fear of missing out to buy Bitcoin. But what happens when all the Bitcoin is gone? We would have said about 6 months ago that didn't really seem like a plausible question. However, now it's something to think about. At this moment, there's still plenty of Bitcoin available. According to a breakdown of the current supply of Bitcoin by blockchaincenter.net, the bulk of coins are still available. And that isn't even including the 2.4 million Bitcoin available on exchanges. But here's the thing, one of the oldest and largest exchanges in crypto, Kraken, recently released its outlook for 2021. They predict 50% of the top 500 companies in the world will hold Bitcoin by the end of the year. But that brings the question, what the heck are the other 250 doing? You think they're just going to sit around and watch the price of Bitcoin shoot through the roof and all their top competitors buying Bitcoin, and they're going to decline to stack up Bitcoins in their treasuries? Here's what people are missing. There just won't be enough Bitcoin out there. The only hope for many of these late-moving companies to get Bitcoin will be when the price gets so outrageous that a company just can't come in and buy thousands of Bitcoin. When companies buy Bitcoin for their treasuries, they don't let it go. That means that once these Bitcoin shoppers pull it down from the shelves and throw it in their carts, it doesn't go back up for sale. At least not anytime soon, which is good news for the prospects of the next bear market. But that's another story. Between the top 4 buying companies we know of at the moment, Grayscale, PayPal, MicroStrategy, and Square, those companies alone are buying up over 210% of the freshly minted Bitcoin supply each day. And now there are even rumors that the mayor of Miami is looking at putting in 1% of Miami's money into Bitcoin. It's pretty crazy how big that could snowball if other cities follow suit. Now, according to Charles Edwards on Twitter, we're entering a supply crisis for Bitcoin. Think about that. A supply crisis, where companies are not even able to buy Bitcoin because there's nothing left. As of right now, only about 4% of the Bitcoin supply is owned by corporations. Expect that number to grow tremendously and exponentially over 2021. We can see that number easily climbing to between 10 and 20%, if not much more. If that 10 to 20% line is breached, there simply won't be enough Bitcoin to go around. You've got to get this through your head, and we can't stress enough to you how important the rarity and scarcity of this asset is. About 18.5 million Bitcoin are in the circulating supply. But here's the dirty little secret people don't know. If Satoshi's original 1 million Bitcoin mined is actually untouchable, like most of us believe, and is removed from the supply, then anywhere between 1.7 and 3 million more coins are considered to be zombie coins, lost forever. These are Bitcoins that have been lost or blacklisted due to hacks. Then this means potentially the real circulating supply could be more like sub 15 million. When these large institutions and corporations start realizing that, the frenzy is going to be unreal as the prices shoot through the roof. Say right now, the company or fund is new to Bitcoin and wants to buy 1,000 Bitcoin. Even now, it's going to be way more difficult than they even previously considered. They can't just create a Coinbase account and buy that much. Most of these deals are done off the books on the over-the-counter market. We can tell you with the supply drying up extremely quickly, it's time to look at phase 2 of this institutional FOMO, the Ethereum phase. The reason why only half the top Forbes 500 companies will own Bitcoin? Because the other half is going to be too late to the party. And they're going to be forced to look elsewhere. They will be moving money quickly into Ethereum when that happens. We can't stress enough how important it is that the U.S. Securities and Exchange Commission decided to declare Ethereum not a security. This means that companies are going to feel just as safe dropping money into Ethereum as they do pouring it into Bitcoin. But there is another dynamic here at play. Ethereum 2.0. The Ethereum 2.0 upgrade means that a big chunk of circulating Ethereum will get removed from the circulating supply as people lock up nodes on the network with a minimum of 32 Ethereum. So, aside from the institutions buying Ethereum, there will be a tightening from the longtime Ethereum holders. The good news for Ethereum institutional investors will be that there's much more Ethereum in the supply than Bitcoin has, but it's less expensive, so you can buy more. But the supply dynamics of Ethereum versus Bitcoin mean that it would be almost impossible for the cost of one Ethereum to ever equal the cost of one Bitcoin. But that doesn't mean it couldn't get to, say, 20% of Bitcoin's price per coin. In a true supply crisis for Bitcoin that spills over to Ethereum, the cost of each coin could be far beyond what most people consider to be realistic, or at least consider to be realistic even earlier this year. You have to understand how crazy it is that the likes of Citi, JP Morgan, the Winklevoss twins have been predicting the rise of both Bitcoin and Ethereum and are buying like crazy. Understand that some have predicted crazy prices like $500,000 Bitcoin or $50,000 Ethereum, but now we have respected investors, banks, hedge fund managers, and more giving higher predictions than the craziest high-side prophecies. But only a true supply crisis will make this happen. And it's not going to be driven by everyone in your family heading over to Coinbase and buying fractions of Bitcoin or Ethereum. It's the big boys looking to secure the bag. Once Bitcoin is out of reach, Ethereum becomes the next low-hanging fruit for people to jump into. It works the same way for institutions that it does for regular people. So what will the end result of all this be other than simply getting our bags pumped? We can see two distinct outcomes if the Ethereum FOMO becomes reality, which we think is very likely. First, we will see the same thing happen to Ethereum that we saw happen to Bitcoin. It will change its purpose. Bitcoin started out as an electronic currency, peer-to-peer, simple, digital money, but not due to any fault of its own or the plan of Satoshi. Bitcoin eventually may become digital gold, a store value. While the Ethereum network itself definitely serves a larger purpose, if a chunk of Ethereum is owned by institutional holders with tight hands, then we could actually see the Ethereum becoming a store value in its own right. Second, eventually, Ethereum circulating supply will run out, similarly to what we are seeing happen with Bitcoin. Ethereum 2.0 will certainly assist this. This means that we need to start looking at what the next institutional coin could be. It would be unlikely to be a smart contract platform, in our opinion, because Ethereum is one. It's doubtful to be an exchange token or a privacy coin. Could this be the destiny of Bitcoin cousin Litecoin, or the Bitcoin fork, Bitcoin Cash? Is it a coin not even in existence yet? It's too early to tell right now, but if you can figure out what the third institutional coin will be, that could pay off huge down the road. Actually, drop us a comment down below and let us know what coin you believe would be the next up after Ethereum. Also, drop us some Bitcoin and Ethereum predictions for this bull run. Thanks for watching the Economic Countdown. Please remember to like, share, and subscribe.